Okay, hey everybody, this is John. Welcome to the free video. So we got the pop over the long weekend, and the question is, how long does this last? This is probably one of the most unbelieved bounces of all time. Like nobody thinks this is quote unquote a bottom, and we go to new highs. And I have to admit, I'm not in that camp either. But I'm also contrarian to the point of, if everybody thinks that, then we need to rip some heads off. I do think we can at least get to the tree line, 102-ish. From there, it could get interesting. So let's take a look at positions. So one, I would say, easy trade that we did on this today was that we bought some $98 calls 3 days out on the Qs, and then went ahead and sold, at the time, the at-the-money put credit spread. And at this point, we are up 315 bucks. Again, if we can get to, I actually am not even, in terms of exiting this trade, you know, we're looking at 102.50 on the Qs before we roll back over. I'm actually just looking for this to get up to about 100. I'm willing to sell these at 280. So Theo priced that out. That would take us to about 175, right around there. So I'm not even looking for the max target on that. Now, in terms of trades that we held over the long weekend, Amazon, we just had a put credit spread on that. Pretty close. We sold it for $433. Right now, we could buy it back for $138. It's at $521. It's still within the expected move, and of course, we've got earnings on Priceline tomorrow. So I did want to give it a little bit more time on that. Might be pushing my luck. The other one we held was Win. This is one that we set up the 68-63 put credit spread on Friday with the idea of getting some weekend decay. We were paid handsomely. For those of you that were smart, you probably bought it back at 20 cents today, 25 cents. I want to give it another day and see if I can buy back the short side for a nickel. I admit that that's a little bit on the greedy side, but the reason I'm giving it a little bit more time is that the expected move is $4, and we are above the expected move on the spread. So I will tend to give these a little bit more room once they go beyond the expected move, but I'm just saying that the smart move is to buy it back when you get to 80% of max profit. That's just, I just like to, throw it out there. That's what I'm doing. The smart move is to, I've already bought it back, and that's the reason that I'm giving it a little bit more room. And then another trade we did here was a diagonal on the spiders and a covered call. And the reason I did the covered call was that somebody had just asked, how do you do that? And I was like, okay, so the covered call, we bought 100 of these at 189.0 something. You can see we're up a little bit there. And then at the same time sold the 192 call against it with the idea that that could possibly expire this week. And you close out both at a profit. And then also did a diagonal where we bought the 187 call with 10 days out, so in the money 10 days out, with the idea that the spiders can continue to rally just a little bit. But then we sold the 191 call that expires this week to see if we can bring that premium in, okay? So the interesting thing that I'm looking at here on the spiders is that we are pushing up, of course, into this fire line, which is very powerful. But we also have a squeeze. If the squeeze does trigger along, we could explode through there, and that is what has me intrigued. The markets are an equal opportunity dream killer, and right now the shorts are bragging about all the money that they've made, and it makes sense that they get their heads ripped off, go back to negative, and then and only then will the markets roll over. Just keep in mind, market is an equal opportunity dream killer, and right now it's the shorts that are in the crosshairs, okay? So one of the questions I've been getting asked a lot is how do we navigate these markets? They're so volatile. And the best way to be able to navigate markets like this is to understand correlations. And the best person who understands correlations in terms of currencies and things like that is Raghee Horner. So we are setting up a class with her, simplerforex.com/navigating. And she's going to have a strategy class Thursday night, February 18th from 6 to 9 o'clock Central. And then she's going to do live trading on Friday, February 19th, essentially during the entire trading day. Okay, so simple rules and strategies for thriving in the current conditions. She loves these kind of markets. These are the topics that she'll be covering. You've got using fundamentals and technicals to find opportunity amidst confusion and uncertainty. There's certainly a lot of that. How to day trade markets and also set up bigger trades. The 2 simple indicators that she uses to define trending and non-trending markets, as well as the specific setups and mindset to avoid the common account killers and volatile conditions, using her ICE system to identify opportunities in any market and time frame, and the best types of chop to trade and what chop can tell you about the markets. So her 3-hour strategy class is just $197, and if you would like to do the live trading, her strategy class plus the live trading is $297, i.e. that includes that. This will be incredibly valuable, especially for what's going on in the markets right now, to kind of get you up to speed on all this stuff. All right, hope it helps. You guys have a great night, and we'll see you at the next update.